Hello and a warm welcome to Property Summits, a show jam-packed with advice on how to build your property business. I'm Emma Birchley, and on hand as ever is our team of hugely knowledgeable experts. Well, first off, we have Richard Bush, the co-founder of Crowdlords, which pools resources to enable more people to benefit from investing in property. We have Ranjan Bhattacharya, a man full of top tips on how to succeed in property after 30 years in the business. Dave Forde also joins me, the man who knows it all when it comes to the world of construction, with 4 decades of experience. Then we have John Howard, who's been there and done it all after 40 years in the property game. And finally, Nicholas Wallwork, an investor and developer who makes the most of his experience as co-founder of wealthlabs.co.uk, the UK's ethical wealth building community. Hello, gentlemen. Lovely to see you all, as always. Lovely to see you, Dave.
Thank you.
Tell us, build to rent, build to sell. Nicholas, to you first.
Yes.
Which?
Well, that's a very good question, and I think it depends on a lot of factors. I think it depends on the style of developments that you do. It depends on the market you're in. It depends on the size of developments you do, whether those are viable or not at certain levels in the industry. The professional sector is called the PRS sector, the private rental sector, and that's where often the bigger developers are building tower blocks to keep the majority of those to rent out. And it's a new model that we're seeing. I think a lot of it is driven by the market conditions. The government are clearly trying to push the smaller incidental landlords out, the accidental landlords, to make tax more efficient and to tax people through the corporate structures. And Section 24 tax is something that does that, where owning properties in your own personal name, you can't offset the mortgage interest relief like you used to. And so all of these sort of economic changes is actually making it harder to be a smaller landlord. So I think if you go for it now, and this is something we always preach on Property Summits, I'll get it straight out there at the beginning of this episode, treat your property investments like a business. And a PRS scheme or a build to rent scheme is one way of doing that and doing a slightly bigger scale development.
Because we know that, of course, there are many people who are never going to be able to afford to buy their own homes. So what is needed is undoubtedly more rentals, isn't it, Richard?
Yeah, I mean, if you look at the analysis, the rental proportion for young people is increasing every year. And I think it's going to grow by something like 10% over a 10-year period, which is a significant shift for young people to remaining in rental as opposed to purchase. But I don't know whether that's what's driving buy to rent or build to rent, or whether it's other factors driving it as opposed to demand. I don't know.
I mean, when you're thinking about building somewhere, Dave, if you are building to rent rather than building to sell, is the spec different? Are those considerations?
Well, obviously that would depend on the type of tenant you were hoping to rent to, but I would say in this current market, where we're seeing either at this moment or predicted property price drops, and we're still seeing an upward trend in build costs, not as sharp as last year, but overall they are upwards. It would then come to the stacking of the deal. Perhaps there's not enough profit in it to flip. Something's only got to go wrong during the build program. You've lost 5-10 grand. All of a sudden, you're doing it for cost. It might just work out for the moment. Bide your time, build it, rent it. You're always going to have the capital appreciation as the market goes up and down, and you've got the regular
allows you to
income.
ride the storm a bit.
Yeah, I would say at the moment that's probably a good strategy.
What's your thought, Ranjan?
I'm not sure whether build to rent or build to sell is the right question when you ask someone what sort of development do you want to do. The right question is, how are you going to exit? That's all I'm bothered about. And I want to exit fast and I want to exit profitably. And then I'm looking at the market conditions and what allows me to do those two things, exit fast and exit profitably. Right now, property prices, end values are going to be down probably about 10%. And rentals nationally have never increased so much. They're up 23, 24% in most areas. So in my mind, the way you're going to exit a deal fast and profitably today is to do build to rent. Because pretty much when the thing is built, you can rent it in a weekend in most areas. You cannot sell 8, 12, 20 apartments in a weekend. You might be waiting 6, 9 months to exit from the last 3 or 4 in the development, and that's where all your profit is.
I think the only slight issue with that in the current market is that we're getting squeezed by these inflationary pressures. So actually, firstly, inflationary on the building materials that Dave's talked about there, the margin's less, so actually refinancing out of that deal, even on a build-to-rent model based on the yield, is going to be harder than ever. So you're more likely to leave more money in, but also selling it at the end. You know, the yield's getting squeezed down, which is holding the prices back at the moment. So, but the bottom line is, if you can refinance out of it, and you're prepared to leave a little bit more
Nicholas,
cash in the deal,
I totally agree.
it'll be all right in the long term.
I don't always.
Blimey.
I know I don't always agree, Nicholas.
I'll wash my ears out.
I certainly don't agree with his dress sense. I don't agree with his dress sense today. That's for sure.
You never ever do.
Smart casual.
To be fair.
If that's casual, what the hell do you like at the weekends?
Pajamas all weekend, John.
Move on.
Getting on to the point, what I would say is for the smaller landlord that has got stuck trying to sell the property and then reverts to letting, because that's always the backstop, if you like. The difficulty is now, if they've got to refinance, the cost of that refinance is just, in certain cases, too much. So they are forced into trying to sell, at least getting their money back. It's a very difficult situation. You've got landlords who are selling because interest rates have gone up, and they, you know, in some cases the rents of the interest rates doubled or trebled. The winners of all this are the large American funds who are buying tower blocks to build or having them built for themselves, minimum of 150 units they want, and they're letting on a very long-term basis, and they're paying cash for these. And of course, the pound against the dollar is weak, so it's very attractive for these big funds, and they're the ones who are really, really benefiting. Of course, the government love it because there's 150 or 200 of them in one go, all brand new, all in good condition, and well managed. And I think that's the way the government are trying to go.
And it also helps with targets, doesn't it?
Spot on.
Yeah.
Absolutely it does, yeah. It really does.
Cash is king, as always.
Absolutely. And when things get tougher and it gets harder, then, you know, the big players that have got the cash and got the power come to a fore.
But that doesn't rule out the little guy. You can raise alternative financing in a similar way to a fund from private investors and people like that, because people are wanting a home for cash. One of the interesting things is that interest rates have gone up quite a lot, but the rates offered to savers have not gone up by anywhere near the same proportion. So there's a massive issue with people wanting a decent return for their savings, and that's not fulfilled. And whether this is actually good news for the country, I mean, if there are a whole bunch of small-time landlords in the UK being taxed and spending their money in the UK, that is far better for UK PLC than it all going to an offshore company in a cleverly arranged American fund, with none of that money being spent in the UK.
With so much uncertainty, though, as there is at the moment, it must be quite a scary time for someone who maybe was thinking that they were going to get into the property business, but making that big leap. It must feel like a big leap.
Well, what I would say is it's a great opportunity. You know, when the market is tougher, there's more deals about, there's more opportunity to make money. The last few years, it's been very tough to make money in property, you know, because everyone has been trying to get into the market. Now there's people who have got to get out of the market for different reasons. And it's a great opportunity, great time to buy, but you've got to be realistic and buy them at the right price.
But, you know, to pick up on the points that were made earlier, whilst it's the wrong question, Ranjan, it is the question that we're facing. Yeah. And I think it's something that as a property professional, you should decide when you enter the development, whether you're going to build it to rent it or build it to sell it.
So you need to know at the beginning.
Well, you need to plan, because like David said, you spec it for the audience, and you would probably spec it differently. The challenge is, and Ranjan mentioned this, is that to exit, you have to get the finance to refinance. Yeah. And if anything, the level at which you can refinance is reducing. And whilst the costs are inflating and the values aren't increasing, it means your refinance amount is less. So you need more capital when you exit on top of the capital you put in when you went in at the beginning. And that's a challenge for people. So
You do, but the rent, like Ranjan rightly said, the rents have gone up dramatically.
Right, so it depends.
To help that.
Yeah, it
depending
does.
where you are in the country, does make a lot of difference.
Yeah, if it's enough units, you can get a commercial mortgage, so it's done on the yield and the value is valued on the yield. But if it's 1 or 2 flats, it'll be valued on the value of the property, not on the yield, and that's where it becomes a problem because the values have dropped, and therefore you won't raise enough money to pay off the finance you used at the beginning.
What will be interesting is, picking up what John was just about to touch on there, is the rents going up a lot.
Yeah.
It'll be interesting to see that because that bar's been set on the rents, I'm not sure they'll ever drop again for the relevant product. So actually, if inflationary pressures are clearly on the downward trend now, which is great to see, so the interest rate rises are working.
Yeah.
And therefore, in a year or two's time, 18 months probably realistic timescale, interest rates might dip a little bit. Wholesale energy prices are already massively lower again, and actually the energy companies propping everything up to profiteer. And so if all those pressures come down, rents stay high, could be a really good opportunity as a property investor in a year or two's time.
It could be, and Dave's absolutely right when he talks about construction costs, because actually it's the perfect storm at the moment.
Yeah.
Construction costs are very high, interest rates are higher. And
Energy's high.
The values have gone down. So it's a perfect storm. But that we'll get through that storm and come out the other side of it.
You know all about the construction industry. What do you think is likely to happen with building materials?
Personally, what I think is going to happen, there's going to continue to be a rise. It's not going to be these dramatic. I mean, at the beginning of January, Jewson's predicted a 20% increase across a wide range of materials. That hasn't happened.
Just this year alone?
Yeah, that was
wow.
January the 1st they released that. That hasn't happened. Now, at this current time of filming, it's a bit of an awkward time to measure things because we've had the slow start back off Christmas. There was a 1.9% downturn in construction output in February because of the weather.
Good.
Now, that would have affected a lot of things, such as civil engineering, groundworks, block work, brickwork. So we don't really know, but overall, it's still increasing. What people must bear in mind is HS2. Now, I'm currently working on now. When I worked on Crossrail, we bought everything under the sun that was available. Yeah. We would rather buy a couple of million quid's worth of materials and throw them in the skip at the end of the job than not have them when we wanted them.
Amazing, isn't it? Amazing.
Now, we got the supply chain, we got the purchasing power, plus we got the prestige. If there's a shortage of concrete or electrical cable.
It's because of you.
It's your fault, Dave.
It's
all your fault, Dave.
We are going to get it before
everyone else.
Yeah,
Absolutely.
Gets it. Yeah. So bear in mind. But and another thing that's not spoken about, perhaps because it's not a popular topic, is a lot of these so-called building materials that we were previously getting from Russia, but now we're not getting them. Well, we are getting them. It's just now they're marked as made in Lithuania and made in Turkey and all that. Okay. So, don't want to stray them into the realm of geopolitics, but I would say that, but the last couple of years where we've seen these horrific, dramatic, constant increases is on the downturn now.
Good.
Definitely.
Glad to hear it.
So, if you were yourself, you had a chunk of money, let's say.
That'd be nice.
Yeah. And you had to make a decision right now whether you were going to build to rent or build to buy. Back to the point, back to the starting point. John, what would you say?
Well, I'm building or finishing projects. So I'm buying quite a lot of projects which are part finished where developers have gone bankrupt, and I'm finishing them and I'm selling them. But I have got the choice because of the price I'm paying for them, the discount I'm getting, because someone has taken the hit on the build cost so far. I am able to either rent them or sell them. So that's where I am at the moment.
Okay.
I think it depends on the size of the units. If they were smaller units, i.e. 2 beds, 1 beds, then I would probably do build to rent. If they were larger units, 4-bed houses, 3-bed houses, I would look to sell.
Good point. Yeah.
Really good point, because that's more housing.
Yeah.
And housing is still transacting. If someone wants to move house, they're still transacting that,
Particularly
albeit at
in
a
the
small
mid
discount.
to upper end. Yeah.
Yeah, definitely. Yeah.
Yeah.
What do you think about it then?
Well, I'm probably 75% a build-to-rent developer, because I like the yield and the income and the long-term sort of benefits that gives you as an investor. I mean, echo Richard's comments there completely. I think it depends what you're building. If you're building flats and that kind of stock that's easily rentable to a more affordable end of the market, then I think build-to-rent's a really good way forward.
But it's interest rates, isn't it? That's the problem with that.
Yeah, I mean, as you say, it depends what you're paying for it, and it depends if you can afford to hold it. You know, the old no money left in deals from 6-7 years ago, we can refinance out at 65%, get all your money back
Those
out,
days are gone.
pretty much long gone at the moment. And so you just have to decide if you can decide to leave a lot of capital left in or not. It depends what your position is.
Yeah, if you just want, it's a deal you're doing, you want to take the rent forevermore, feel comfortable and waft off into the sunset, then it's quite a good way of doing things, isn't it? What do you think, Ranjan?
I think at the moment it's built to rent. I think particularly for 1 and 2 bedroom flats, that's particularly what I'm doing. I think there's an assumption here that everyone's just going for bank finance into the mix. We're doing some deals at the moment where we've got equity funding in the mix, and they are in for a 5-year ride. Now, the thing is that at the moment rents are very high. If you can finance a deal so that you're cash flow positive after all costs and financing costs and all the rest of it, and hold the property cash flow positive for 5 years, I believe we'll see a significant capital appreciation. Because after every single recession that we have had in the last 40 years, we have seen massive house price growth within 5 or 6 years thereafter. So
Hold your nerve, stick with it.
if you can cash flow positive the deal from day one, hold on for 5 years and come up with a funding mix that includes a little bit of equity investment as well as bank finance to get that cash flow positive, wash its face, you'll do very well in 5 or 6 years.
I'm going to ask a question that might make me look a bit stupid. What do you actually mean by cash flow positive?
Basically, after all your costs, you're making something. So management costs, financing costs, maintenance costs, all that sort of stuff, you're making something.
Yeah, and then you can hold it for
Yes.
5 years and
Yeah.
see what happens. What do you think, Dave?
Well, I've just noticed that when I look in my local paper, there's been a lot of planning applications granted for blocks of flats. And when I read the details of them, at least 3/4 of them are for social houses. So it would appear, I can only speak for my local council, that obviously they've got a housing shortage like everyone. Any developer who's willing to build homes to rent and alleviate that are going to find the planning application a little bit easier. But as Ranjan said, you've got to make money as well.
It's a balance, isn't it?
And people do need homes, don't they? I mean, that is the
There's a
issue.
huge
it's
shortage.
a real
Huge
big
shortage.
problem. I know you are in the money-making business, but people want to have somewhere to live.
For sure, and there's a massive housing shortage, and that's just going to get bigger and bigger.
It's been a while in the market since we've actually been talking about capital growth. You know, it's been quite a stagnated market for quite a few years. COVID came along, and then there was this pent-up demand and this boom after COVID, which was a bit of an inflated boom. It was just because no one could move for a couple of years. And now we've had all these inflationary pressures and the war and everything else. And so I think we're set sooner than everyone thinks for another sustained period of growth. The pent-up demand from the sort of last couple of years is just building and building, with developers building less at this time as well because of the costs and the viability of sites. I think we're set for a really strong recovery in the future. Is that 1 year? Is that 2 years? Who knows?
Exactly. and the other reason for that, it's not just pent-up demand, it's the effect of inflation. So everything's gone up. So it only takes a little bit of lag before people's wages have to catch up. That will take a few years, when there's a little bit of green shoots of recovery. As people's wages start to pick up and catch up with the inflation that's already happened, you tend to find that affordability has gone up. And then all of a sudden, what you have is this value of money issue. 100 grand today doesn't feel as much as it did 5 years ago. So how can 100 grand house or flat stay at 100 grand in 5 years' time when you've had 10% inflation for so many years.
No, that's a good point. It can't do. No.
Buy assets.
It has to catch up.
Buy assets that put money in your pocket in the short term, and they will go up in value in the long term.
Do you think, maybe slightly going off the topic, but thinking about rents, I'm talking about how much they're going up. Do you think that there's a bit of kind of the greedflation about it, that landlords are thinking, right, well, everything's going up, we're going to whack it up higher?
Emma, look around you here.
I know you're probably the wrong people to be asking.
These landlords over here, I mean, come on, what do you think they're doing?
Whacking up the rent.
Spot on.
I don't think it's
Spot
greed
on.
though.
I don't agree
I don't
with
believe
that.
it's greed. I mean, costs have gone up significantly for landlords.
Yeah.
Interest rates alone.
Interest rates are a big thing, I would
Yeah.
say.
And there's
Joke apart.
actually a delayed effect, isn't
Yeah.
there? Because
Yeah.
lots of people, I guess, will be
Staggered.
on a fix.
Yeah. Staggered.
And that's waiting to,
Yeah.
you know, they're going to get to a point where they've got to refinance, and then
They have, Emma, but there's a point where, of course, you get to a point where these people can't afford the rent.
Yeah.
So there is a level
But
where
it takes us back to there
inflation
needs to be
and
more
wanting
social
bigger
housing.
more wages. And,
Well, they keep upping the minimum wage. You know, the government and the economy is going to have to follow, aren't they, by paying people more. It will go that way as well.
I don't like the terminology greedy landlords and all of that. I mean, there's a market here.
That's why you
No
meant
one-
to go.
John
I'm
is
sure you
tarring us
don't.
with his
I'm sure
brush.
When we had COVID, you know, and many landlords were running at 20% plus voids, and rents were down significantly.
yes.
You know, we had to roll with those punches.
Yeah.
Today, the punches are quite different. The punches are in, you know, council tax going up quite a lot. If you're doing HMO type of accommodation, if you're doing bills included type of accommodation, that's all gone up. Financing costs have gone up dramatically.
Regulations as well. More regulations.
Regulatory compliance and
Yeah.
the cost of getting your housing to EPC rating C in advance of 2025, and also maintenance. Getting a plumber has got so much more expensive, you know. So all of that factors in
I
to your
agree.
cost base. And the other thing is, you know, when I got started in property, which was a few years ago now, the majority of my tenants,
Was that 60 years ago? Was that?
the majority of my tenants were tenants on a temporary basis, meaning they were saving up the deposit to buy a place.
Yeah.
Today, most of my tenants are not saving up a deposit to buy a place. They're not saving at all. There's no incentive to save. They don't intend to buy a place. What they're interested
Well, they
in...
maybe would like to, but they
Well,
haven't
no,
got the
they actually don't.
They see it
They just want an experience. They want a good quality experience out of life.
And you're going to provide
And
it.
they're willing
there's
to
a-
pay.
And on,
No, they're willing. People are willing to pay if you're providing good quality housing, which is well maintained and well serviced with premium features.
well, I'm afraid that is all we've got time for now. Thank you all very much. And we'll see you next time on Property Summits.